Hi everyone, welcome to the Economics Weekly series initiated by Convert IAS. And in today's session, we are going to discuss those news articles which came over in different newspaper between 11th to 18th of November. Okay, and in this today's session, we are going to cover first rising retail inflation, which has breached our tolerance level target, which is 4 plus minus 2, and now inflation is around 6.21%. Okay. Second is cut in windfall taxes. Third is weakening of Indian rupee. Fourth is widening of current account deficit. And fifth is ease of doing business ranking by EIU. We will be discussing these topics from a prelims as well as mains perspective and will help you to understand the current affairs in a proper manner so that you will be understanding all the economic relevant things comprehensively. Okay. So without wasting any time, let's start. Rising retail inflation. So right now inflation has reached to 6.2%, which has breached the tolerance level, as I told you before. So in this one, what is the major reason? Because core inflation has rise by very marginal level only. So this is because mainly food inflation has risen and it is reached up to the 15 months high, up to 10% of the level. So food inflation is around more than 10%, and that is why it is directly affecting our inflation target and inflation level right now. Okay, and even especially in food inflation, if you're talking about, then vegetable has reached to 42%. Just a second. Vegetable inflation has risen by 42%, and then oil and fats rise by 2.51%. 9.51% from 2%. Okay, so in short, if I need to tell you why inflation is high right now, there are multiple reasons. The major reason is food inflation, and in food inflation the major reason is vegetables and oil and fats prices are being hiked up. Okay, and there are many articles were there in the newspaper, but I have covered these two and I'll be discussing about the crux of these articles in the next slide as well. Okay, so from a prelims perspective, because this news article was ongoing process, but what you need to know for a prelims is to difference between the core inflation and headline inflation. Okay, so even core inflation means those inflation of all the goods and services excluding those volatile food and fuel prices, excise duties and income tax. That means core inflation are just being stable most of the time, not being volatile up to the large level, because it exclude food and fuel prices, because fuel prices depend upon the international price level. And even right now, because we will be discussing why inflation is that in oil prices are being hiked up because of the West Asia and other disturbance at the international level, and food inflation, which I just discussed. Okay, so core inflation exclude, remember this, core inflation exclude food and fuel prices, excise duties and income tax, majorly fuel and food prices. Okay, and it helps in forecasting long-term inflation trends and formulating an appropriate the monetary policy. Okay, so even in some of the news article I read that some people are demanding that monetary policy committee, this is the committee in RBI who looks up to the taking the inflation targeting and try to manage inflation in the economy. So there are people who are demanding that MPC, this committee, should focus on core inflation management, because food inflation or fuel prices are not under their control. It is creating a supply push inflation. So there are demand. I have read articles, so I just shared you here. So what you need to know, the core inflation and headline inflation. So core inflation, I hope that you have understood. It excludes food and fuel prices. And headline inflation, which is the currently retail inflation, what we are discussing, 6.21%. So headline inflation include housing, transportation, medical, electronics, food and energy. So it also include food and fuel prices. Okay, and that is why it is volatile in nature. And generally, if we are talking about inflation in a country, we are generally talking about headline inflation until we are explicitly mentioning that core inflation is at this level. And I am not sure exactly about the data, but as far as I remember, that core inflation is right now around 3 point something percent. So headline inflation means it includes food and fuel prices, which are generally volatile in nature. Okay, and what is tolerance level? Tolerance level for inflation in the economy, for Indian economy, is 2 plus minus 4%. Okay, that means 2 to 6%. And this tolerance level can be different for different countries. For example, India can afford up to 6% of inflation, but US cannot afford up to 6% of inflation. Even if it is higher than 2% of inflation in their economy, that is creating an inflationary pressure in their economy, and they are trying to manage because they have the limited potential to grow. And for India is a developing country and we have a large potential to grow. Okay, so there is a lot of things to discuss in it, but for now just try to remember the core inflation and headline inflation, what is included and what is not included, and monetary policy committee under RBI. That's it. Next is reason for inflation. So of course in prelims there can be a multiple reason come. There are multiple choice question and you need to figure out what is demand pull inflation, what is cost push inflation. You will be able to figure out only when you are able to understand what are these three terms means. First is demand pull inflation. That means demand has risen in the economy. Suppose you have 10 rupees and you are able to purchase suppose 2 pens, but in the next day you might get 100 rupees and you will be able to purchase then 20 pens. So from 2 to 20 pens demand has risen, and suppose supply is limited for that particular pen. So because of the high demand, prices of that pen will increases. Okay, so that will create demand pull inflation. That means people have more money and they are demanding more, because they have more money and they are demanding more, and because of the limited supply prices increases. Okay, second is cost push inflation. That means production cost has increases, transportation cost has increases, something related to product has increased, and that is creating a increase in price. For example, oil prices. When oil prices increases, when fuel prices increases, it directly impact each and every commodity in the economy. Why? Because transportation cost increases. So that is creating a cost push inflation. Cost has increased for that particular product. Okay, and food inflation is also because of cost push inflation. We will be discussing COPWEB model in the next slide, so you will be able to understand how it is cost push inflation. But for now, just understand that demand pull inflation means demand, you have more money and you are demanding more, and because of the limited supply, prices has increased. Cost push inflation means you have limited that cost of that particular product has increased because of the rise in input material cost has increased. Okay, so because of this, cost of the total production has increased. Third is built-in inflation. Built-in inflation means suppose economy is in trouble because of the inflationary pressure, people are seeing that there is a hike in prices, so they are also demanding more wages from their company, from their factory. So because of this, when workers think that inflation is going to be stay in the economy, it is not going to normalize, and they are accepting that situation, and then they demand wage and salary hike. Okay, so they are demanding that there should be increase in their salary and wages, so that is also increasing their cost of production. Okay, and because of this increase in cost of production, again what happens? Prices increases, so that is creating cost push inflation. So this creates a vicious cycle. What? Vicious cycle of inflation. So that is called built-in inflation. So I hope that you are able to understand demand pull inflation, cost push inflation, built-in inflation, and core inflation, and headline inflation. Of course, there are other types of inflation as well based on the speed it is having in the economy, creeping, galloping, and hyperinflation. But we need to discuss, we need to know this much for now. Why? Because when we are discussing that government should control inflation, or RBI's MPC, Monetary Policy Committee, should control inflation, what we are talking about, which kind of inflation we are going to target? They have control on demand pull inflation, not cost push inflation. They have control because they can increase or decrease money supply. They can control money supply in the economy. That means they can increase money availability in the economy or decrease money availability. And that's how they control demand pull inflation. But when inflation is cost push because of the oil prices, because of the food inflation, then they have to work on structural reform rather than controlling monetary or fiscal policy, using monetary and fiscal policy to control it, because they have control on demand pull inflation only. Okay, so when we are discussing about food inflation or oil price inflation, related inflation, then you need to understand that RBI's MPC or even the government has limited control over it. Cost push inflation, they have to do certain structurally steps. They have to take some other extra steps to control and reform in the system so that they are able to control food inflation and other kinds of these issues. Okay, then this one, because in one of the article and even in last MPC, Monetary Policy Committee meeting in around October, I'm not sure, but around October it happened, and they said that RBI chairman, I think, he said that RBI is taking neutral monetary policy stance. So this was exact word written in the article, neutral monetary policy stance. Right now, if you are able to understand these keywords, then you will be able to understand those news articles as well. So that's why I have kept it here, so that you need to know what are neutral monetary policy stance, what is accommodative monetary policy stance, and what is bullish monetary policy stance. Relating to the current affairs, you need to know that RBI's MPC, Monetary Policy Committee, is now at neutral monetary policy stance as per the last meeting they had. Everyone was expecting that they will take accommodative monetary policy stance, but RBI said no, we will take this step only. Neutral monetary policy stance means they are not going to take any major step to control or increase inflation. They are not going to take steps. They will see, they will observe economy. That means observe economy. No step. Because if there is an inflation, of course, there is a lot of things to do. In monetary policy, there are quantitative and qualitative measures. There are CRR, SLR, open market operation. There is a lot of things. We are not going to discuss here right now because we have to focus on articles related only. We will be discussing it in later current affairs. Okay, so for now, neutral monetary policy stance means RBI is observing the economy. They are not taking any major step to control inflation or to encourage inflation, because at that time what happens is, till September, inflation was under control and everyone was thinking that RBI will reduce their repo rate so that there can be increase in money supply in the economy. So everyone was expecting that there will be accommodative monetary policy stance. Accommodative means MPC, what they will reduce repo rate, because MPC had control over repo rate. They decide repo rate, and based on that they decide they try to control the money supply in the economy. Okay, so if they decrease their repo rate, that means bank will have more liquidity to lend and they will be able to increase money supply in the economy. So accommodative means they are encouraging inflation. That means adopting or encouraging inflation. Okay, but if they are not taking any step, that means they have maintained those rates as at a stable point and they are not changing it. Third is bullish monetary policy stance. That means they are increasing repo rate. Okay, So neutral policy stance, no change, no major step. They are just observing the economy. Accommodative monetary policy stance, that there is a limited inflation and economy can encourage inflation. They can have more inflation in the economy because inflation is somewhat, because I just told you that tolerance is 2 to 6% of inflation. If inflation is there in the economy between 2 to 6%, is generally good for economy because it encourages production. It is increasing demand in the economy. It encourages production so that more production can occur, more economic activities is going to happen in the economy. Okay, so if economy can tolerate more, they can go up to this level. So accommodative monetary policy stance, they will reduce their repo rate so that money supply can increase and economy can have at least more demand. But in bullish monetary policy stance, they will increase repo rate so that they can discourage money supply, decrease money supply. So in that case, they will control inflation. What they will do? Control inflation. Okay, so I hope that you are able to understand and differentiate between these three: monetary policy stance, neutral monetary policy stance, accommodative monetary policy stance, and bullish monetary policy stance. In last, I'm just revising it so that you are able to understand this current affairs in a proper manner, because probably in next MPC meeting, RBI may change their stance. In last MPC meeting, they took neutral policy stance. They said that they are not going to take any major step. But because now inflation is breaching the target, which is 6.21%, so probably MPC may go for bullish monetary policy stance, because they do not have scope for accommodative for now, at least for now. Probably in next 2-3 months situation can get controlled and they can go for accommodative, but for now they might go for neutral or they might go for bullish. Probably, as much as I think, they will maintain this status quo and they will be having neutral monetary policy stance only, because there is probably food inflation might control in next 2-3 months and inflation will come under control. Okay, so I hope that you have understood this point. It is very relevant to understand current ongoing news articles. So from mains perspective, you need to know what can be the major reason even for now that why these inflation has been there, why inflation has increased to larger extent. First is strong unseasonal rains. Of course, extreme weather events is happening nowadays because of the climate change. At some places there is a drought, at some places there is a huge rainfall. Even in yesterday's newspaper, I read that India received more than average rainfall this year, but it was not equally distributed at each level. At some places it was huge, at some places there was drought. So on an average, overall it was good. But if we see at a local level, rainfall was not good at each in region. Okay, so strong unseasonal rain is also impacted and led to wastage of perishable food item, which can be destroyed in some time. Okay, and third is second reason is import tax hikes on oil seeds. So majorly we used to import palm oil from Indonesia and from other countries as well. So there has been increase in import tax duties, and because of this these palm oil or oil seeds prices increases. Okay, so it has increased. Third is core inflation meanwhile likely remain elevated in October due to unfavorable base effect and higher metal prices. Okay, so right now why majorly food inflation? I told you first reason is climate change. Okay, so first reason is climate change, drought, untimely rainfall, that you understood. Major reason is cobweb issue, because you must have read that this food inflation is recurring in nature. In one quarter you have a stable prices, in the next quarter you have a high prices. So it generally happen because of the cobweb issue. That means quarterly inflation. In one, there suppose there is a 4 quarter, quarter 1, quarter 2, quarter 3, quarter 4. In one quarter you have good price, stable price. In second quarter price increases, in third quarter price decreases, in the fourth quarter price again increases. So it is recurring in nature. This is known as cobweb issue. Why it happens? Because cobweb means periodically demand and supply mismatch. that means suppose tomato or even onion or other product, vegetables, these are the essential items. You cannot ignore these production or these consumption, right? These are the essential item, but their production is based on seasonal level. In one season there will be huge production, in next season in next quarter there will be lesser production. First reason. Second reason is that there is a periodically demand supply mismatch. Suppose in quarter 1 there was more demand increases for tomato. Okay, suppose in quarter 1 demand for tomato increases. So what happens is more farmer will see that tomato prices are being increased because there is a lot of demand. Okay, so in the next quarter what happens? Farmer produce tomato more. So production for tomato will increase. So in next quarter what will happen? Supply will increase. Okay, so in next quarter when supply increases, price decreases, because in first quarter there was a limited supply. Demand increases and that lead to price increase. But in the next quarter when all the farmers, rest of the farmers sees that tomato prices are being hiked up, if we produce more we will be able to generate more profit. In the next quarter they will produce more tomato. So what happens is in the next quarter supply for tomato will increase and that led to price reduction in tomato. So again farmer will incur loss. So in the third quarter what they will do? Third quarter they will not produce tomato because they are thinking that they are not getting profit. They incur loss because of the reduced price. So in the next quarter what happens? Again supply decreases because lesser production, and demand increases. Demand not increases to larger level, but if you see that supply has decreased and demand increases as per the supply, so again price increase. So this is known as cobweb issue, periodically demand and supply mismatch. Okay, because these are essential item, demand is throughout the year but production is in some specific seasons only for some of the vegetables. Okay, so reason I told you, two reasons: essential item and second demand and supply mismatch. Again imperfect market information. Why? Because farmer in one quarter is thinking that let's produce more, and in the very next quarter they are thinking that let's produce less. So it is happening because of the imperfect market information. They are not having the market information what is going to happen in the next quarter. Limited price transparency, again inadequate infrastructure, government intervention such as minimum support price and procurement operation. This also led for some of the price, but MSP is not for all the products that you know. Okay, so what is the solution for it? Solution is, if pre-sowing, that means if at the time of decision making, government should publish reports and advisories to the farmers at a local level. Advisories and report related to crops, what should they produce, what should be produced, okay, and second weather, so that farmer can take important decision related to water or related to fertilizer and related to all those things, and then crop or soil nutrients in those specific area. So reports and advisories are very, very important, which is lacking nowadays. Government has to take this step to control and to bring structural reform in the agriculture. Then forward contract and future markets. It happens, of course, in the last farmers bill there was some major reforms taken related to contracts, but ultimately it took back by the government. But that was the progressive step in my opinion, because if private entrepreneurs is having a contract with the farmer, so whatever the farmer is being produced, they will be utilized by those private entrepreneurs under the enforceable contracts. So that is important. Third is diversification. Again, farmer cannot rely only on tomato, only on onion, only on potato. They should diversify their resources, their income earning sources, as well as their cropping pattern, so that if one product is price reduces, if they are having a loss in one crop, they at least gain profit in other crops. Okay, so diversification is also important. Post harvest, they can have a better storage capacity and to hold the crop for long, because we are lacking at cold storage facility. Okay, so we are lacking at this, because if we have efficient and sufficient cold storage facility, then we will be able to save those tomatoes, vegetables and all those products, so that supply of those products can be controlled and can be at least available in case of scarcity, and can be controlled in case of surplus, so that price is being stable in the market. Okay, and Operation Green, data driven. And apart from this, in post harvest you should also focus upon, just a second, in post harvest you should also focus upon food processing industry. This has exactly been discussed in this article. Where is this? This one. Government shouldn't suffer for want for a market fix. In this article, they are discussing that to control these wastage of food in case of surplus, because in one particular suppose in one season tomato production increases, and in that season supply of tomato has increased. Okay, so there is a lot of wastage of those tomato. If we are able to utilize those tomato into the puree, into the ketchup, into the other tomato products, okay, processed food item, then we can safeguard those wastage of those product as well. And second, we should also encourage consumption of those processed item into our daily kitchen lifestyle as well. We can use tomato puree as compared to fresh tomato in our kitchen. Of course, it is not as per our current consumption level. We do prefer fresh vegetables, but from a government perspective, from an administrative perspective, and what is discussed in this article, they are saying that we should also change behavior of those in the economy. To change behavioral pattern, we should also focus on consumption of puree, ketchup in our daily essential consumption patterns, so that we can reduce dependency on those fresh vegetables, which is creating a demand pressure in the economy. Okay, so in post harvest what we can focus, food processing industry, and focus on behavioral change. Adopt processed food items. Okay, so I hope you are able to understand this. So in this one, right now, food inflation, why cobweb issue, you have understood it. Climate change, tomato inflation even in October increased up to 161%. You can imagine how much it has increased. But why it has increased? Because of the rainfall and untimely supply issues. But in November, it has decreased, as discussed in this article, that tomato price reduces by 21%. Why? Because fresh supply came from Madhya Pradesh and Himachal Pradesh. So food inflation is, as I said, that in one quarter and in 1 month you will be having a high prices. In the next month it will decline because of the fresh supply. So it is a recurring process. Then release again, to control onion and potato price, government releases buffer. They had some sort of buffer with them, and they releases those buffer and reduce prices from double digit. So earlier it was in double digit, they decreases, but at this point of time again onion price has increased. So government will definitely take some steps and they will control it. Okay, so these are recurring, and that's it you need to know. So I hope that you have able to understand the current ongoing food inflation issue and inflation, why it is increasing and all these things. Next news article is related to windfall tax. It has came in Mint, and it is generally saying that this one, windfall tax on crude oil prices lowered to 0 on 18 September from 1850. Windfall tax, what is this? You need to know this first and then you will be able to understand. Windfall tax means levied on companies or individuals who have unexpectedly or dramatically gained large profit, often due to external factor beyond their control. That means suppose you are earning 100 rupees, okay, but because of the external events, because of some external things which is beyond your control, you are getting positive externality. That means you are getting positive benefit out of that event, and you started earning 1000 rupees. So your earning increased from 100 to 1000 rupees without increasing your economic activity per se. And these events, those external factors are beyond your control. So what government say that you are earning much more than what you deserve. So at this position, you should give us a more tax, so that we are utilizing those taxes for the welfare of the state. Okay. So in this case, what happens is when Russia-Ukraine war broke out, oil prices increased at a multiple level throughout the globe. But because of the good supply and good relation with Russia, India was able to manage those oil supplies, crude oil supplies. So those Indian companies who were importing crude oil, they were importing at a lesser price. So they were having a large, enormous profit at that moment. So because of this, government started imposing windfall tax on them. They imposed on 2022, okay, and they reduced now. So it was increased up to 1850 rupees. Okay, so now it has reduced to 0. So I hope you are able to understand that windfall tax are the levies on the companies which is imposed by government because they are having unexpected profit due to external factors which is beyond their control. Okay, and it is commonly levied on oil, gas and mining industry. Okay, because there is a scope in these industries that they can have a large amount of profit because of the external factors. And tax rate, this is a factual thing, that's why I added here that to calculate windfall tax rate are reassessed every 2 weeks. Okay, so probably in prelims question you might get that it is reassessed in 1 month or through 2 months or even that's it. So you need to know that these are reassessed at every 2 weeks. So from a mains perspective, it is not that much important from a mains perspective, but it has given, so I added here that from a mains you need to know why windfall taxes are being imposed by the government. Of course, to have a surplus amount with them so that they can spend it on a welfare of the people. So purpose is to capture the portion of the extraordinary profit that companies make, redistribute it for the public good. So they can boost government revenue, they can increase their capital expenditure, they can provide more public services, and all these things happen. Okay? Okay. So our third article is related to weakening of Indian rupee. Even today, for now, $1 is equal to 84.39 rupee. Okay, so it is showing that how much our rupee has weakened with respect to dollar. Why it is happening? This particular news article is related to the further weakening of a rupee. Why? Because there has been a change in administration in the US. Trump has came. So this particular article is related to that particular thing only, that how it is going to affect Indian rupee when Trump is going to administer in US. So let's discuss this article first, then I'll be discussing what are the different reasons for current weakening of Indian rupee. Okay, and what are the other relevant things. So in this article, this graph is showing that even everyone is being scared of the Trump administration because of their previous experiences with the Trump, because they do take unexpected steps. So that might go worse for the economy, any economy per se. Okay. So, but in this graph, it is showing that India does not need to worry much with respect to Trump administration. Why? Because if we see rupee weakening in Obama terms, rupee weakened by 24%. In Trump administration, last Trump administration, rupee weakened by 6.7%. And in the Biden administration, the last one, rupee weakened by 15%. So if you compare between Biden, Obama and Trump administration, rupee weakening in Trump administration was even lesser. So it is not going to be like, India should not that much worry about Trump administration, and even India and US relation is based on a strategically means, so they are going to be same more or less in some of the fields, but overall relation would be stable. So that is a subject matter of international current affairs. But for now, you need to know that India should not worry much with respect to rupee weakening because of the Trump administration. But of course, it has an indirect impact. I'll be discussing it the next one. This graph is showing that because of the rupee weakening, we had largest forex reserve in September only. We had $710 billion in September, but for now we have $676 billion. So forex reserve is also reducing because of the weakening of Indian rupee. Okay, and it is ongoing process. Probably it will reduce further, because there are chances that if people are saying that the rupee will further weaken. So why, the main question arises that why rupee is weakening for now. First reason is the geopolitical risk. There is a West Asia conflict between Israel-Gaza war, then Israel-Lebanon war, then Israel-Iran issue. There is a lot of turmoil going on in West Asia. Okay, and because of the Russia-Ukraine war as well. So because of these two reasons, and of course the uncertainty at the global level, volatility to global prices, oil prices are there, and because of this, oil prices are being increased and leading to inflation in the economy and further weakening of the rupee, because it is directly impacting in vicious cycle of the inflation as well as weakening of the rupee. Okay, high gold prices and increased risk aversion due to the mix. Why high gold prices? Because the demand for gold has increased to the larger extent. Why it has increased? Because China has increased. Even I don't remember exactly, but around a week before, I read in one of the article that China has increased its gold purchase by multiple fold. Gold purchase by China increased multifold. Earlier, China was having dollar as a reserve, but because of the Trump administration and of course the uncertainty with the US relation, China-US relation, they are focusing upon maintaining gold reserve. And because of this, they have increased their gold purchase, and because of high demand, gold prices increases. And other economies also increases their gold purchase. So there is high gold prices because of high demand. Okay. Third reason is increase in capital gain tax. In India, there has been increase in capital gain tax by the government, and because of this, there has been an outflow of capital. Capital comes in a country in form of FDI and FPI, foreign direct investment and foreign portfolio investment. I'll be discussing in the next point FPI, but for now FDI. Capital gain tax means if you are incurring more profit after a certain point, then you will have to pay extra tax to government, and it has increased around 15 to 20%. Okay, so because of this, those people who were investing in India, they think that they are having a not that much profit out of the capital investment, so they started reducing their capital investment from India. So there is a capital outflow because of increasing capital gain tax. Then fourth reason, and one of the major reason for current stock market turmoil, is the outflow of FPI, foreign portfolio investment. There has been a large outflux of those foreign portfolio investors. There has been a lot of outflow. In October only, there was $10 billion outflow. In November, I think up to this till date, I think 3 more billion, so up to $13 billion. I'm not sure about the exact data because it can increase in further times as well. But you need to know that there has been a large amount of outflow of FPI out of Indian stock market. Why it is happening? Again, first reason is China's economic stimuli plan. So there has been a tendency in the economy that buy China, sell India approach. So people are those who FPI invested in Indian stock market, they started selling Indian shares and started buying Chinese shares. Why? Because China has encouraged those FPI in their economy. Okay, so first reason is that. Second reason is US election. Because of the US election, they wanted to control their inflation in their economy, but they wanted to control those inflationary trend in the economy. So they were increasing their prices. Federal Reserve were increasing their prices. So because of this, outflow was there, outflow of money. Then increasing oil prices. So if you see that there has been a large amount, if in short you need to bring a crux that why rupee is weakening, there is a huge outflow of capital, both FDI and FPI. FPI to the larger extent. Okay, FDI to the larger extent, FPI. Then there is a more import cost. Why? Oil prices increased, gold prices increase. Okay, so because of all these reasons, what happens is at the international level, demand, just a second, demand for rupee decreases, demand for dollar increases. If you see that if our import cost increases, or if there is an outflow of capital, that is directly showing that demand for rupee has decreased and demand for dollar has increased. So of course in the foreign exchange market, when demand supply mismatch and demand for rupee decreases, that will create weakening of rupee. So I hope that you are able to understand why rupee is weakening. And because of all these process, because FPI is still outflowing from India, FPI is still reducing in India. Okay, so because of this, further there is a lesser demand for rupee and there is a higher demand for dollar, and because of this there is further weakening of rupee. So there are chances that rupee will further weaken more. At least it will reach up to 85 rupees. Probably I am just saying you based on the articles I have read, but probably it might change later. We will discuss in these sessions only. Okay. So I hope that you are able to understand this news article as well. Next is export rebound, but October import will hit new record. Now our current account deficit, trade deficit or current account deficit is widened and trade deficit increases to $27 billion. Why it is that? Probably why trade deficit happens. Trade deficit happens when import is more than export. Of course, because we are outflow of rupee is more than inflow of rupee or currency or money, whatever you say. So import is more than export, and that is why trade deficit is there. So trade deficit happens for maybe multiple reasons, but for now you can say that trade deficit may happen when export decreases or import increases. Okay, so by looking at this graph, you can see that export has increased. I mean in August, export was $34 billion. In September also they had 34 stable, but in October they had $39 billion. So export has increased by $3 billion if you see from September to October, but import has increased by multiple fold. Import has increased by a greater percentage. Earlier it was 55, now it is 66. So around $11 billion import has increased. Okay, so you cannot say that export is reducing in India and because of this we are having a trade deficit. No, trade deficit is happening majorly because our import cost has increased. And why import cost increased? You know it. I just told you before that oil prices increases, gold prices increases, and because of this our import cost has increased. Okay, so I hope that you are able to understand this news article as in proper manner. Then for a prelims perspective, you need to know what is current account deficit. Current account deficit means when the value of a country's import of goods and services is greater than its export, as I told you before. Okay, CAD and fiscal deficit together make up a twin deficit that can impact a stock market and investor. Because when for now our fiscal deficit is around 6.5%, that is not much high if we compare with other economies. But for now, if the twin deficit means if CAD is high and if fiscal deficit is also high, then in that case any investor will see that this economy is not doing well. They will observe that this economy is not doing well, and because of this they will reduce their investment. So there will be reduction in FPI, there will be reduction in FDI, and that will create a vicious cycle. So because that's why current account deficit should not widen in any economy. Okay, from a mains perspective, you need to know that why it is current widening of the CAD. As I told you, gold import rose from $7 billion to $7 billion from $4.3 billion. So earlier it was 4 billion, right now 7 billion. Majorly because of course we have increased our gold import as well, because we want to make more gold reserves as compared to other currencies, because gold's reserves are more reliable than other form of currency. Okay, first. And second, there is because of the high demand and higher demand by all major economies, India, China and other countries, so there is a increase in gold prices as well. So because of this, $4 to $7 billion it happens even in 1 month. Then crude oil import also increases from 12 to $18 billion. Then bullion import, same cheese, gold. Okay, then impact of widening CAD. First is reduce investor confidence, as I just explained you before. And when countries import exceed its export, it can cause decrease in demand for its currency, leading to weaker currency value, as I just explained in the weakening of rupee section. This is the same thing happening here. Okay, if a country is unable to finance its current account deficit for investment, it may need to borrow it to cover a gap. So again, it creates a vicious cycle, because to cover CAD, they need to increase their borrowing. That means more interest payment in later years. Okay, in later years. Then how can we control current account deficit? Of course, to encourage export. If we are increasing our export, that means our export will be in more than import, as happens in service sector. We have a service export surplus. We do service export more as compared to import. So that we can do for goods market as well. Then promote import substitution. Not import substitution, can be a negative connotation. You can call it Atmanirbhar Bharat. Atmanirbhar Bharat. Self-sufficiency. That means we need to encourage our supply chain. India has to be an important part of those supply chain. And we need to improve our productivity and competitiveness, so that our product is being demanded at the international level. So India has to work on a multiple level and multiple sectors as well to discourage these current account deficit. Okay, so I hope that you have understood this. Next is India's rank third in improving its business environment. This is the EIU, Ease of Doing Business ranking, and it has taken 82 countries into under this index. Okay, so this article can be used for giving examples in the economy when you are discussing about business environment, that India, as per the EIU index, India is being considered as a third level in terms of improving its business environment. See, this one is not saying, don't get confused, that India is at third level in terms of ease of doing business. No, it is third in terms of improving business environment. If we see, even still, there is a Singapore first, Denmark second, and US third level. Okay, top three are these three countries only. In terms of a strong improvement, first is at Greece, second is Argentina, and third is at India. So it is a positive example. And this EIU index has also said that India is the only country in the market that offer potential scale comparable to that of China's youthful demographic profile, promise both strong demand and good labor availability, digital infrastructure. So that means this index has said that India has the capability to compete with China's market. because we have a digital infrastructure, strong digital infrastructure, we have a labor availability. We need to work on certain parameters with respect to skilling, with respect to infrastructure, with respect to ensuring ease of doing business. But India is doing good in this terms. So you can use it as one of the example. Okay. So, and this ease of doing business ranking is claimed to be, like they say, that it is more comprehensive than World Bank ease of doing business, and World Bank ease of doing business discontinued in 2020 only. So for now, this is significant from an investor perspective, because if they see that India is improving, they will invest more. Okay. So with this, our today's session is getting ended, and I hope that you are able to understand those current affairs on a weekly basis. And in the next session, I'll be coming up with more relevant current affairs, especially related to carbon trading mechanism and other ongoing news article I'll be looking at. Okay. So I hope that you have enjoyed it, and if you have any doubt, you can put a comment, and our team will definitely try to solve your query. So, and to get this PDF, you can go to the link and get this PDF. Okay, thank you. Have a nice day.